Hello guys. All these FX here, I will be talking about. Let's analyze AUDCHF, guys. Now, AUDCHF, it is in a very good shape for us to be able to trade it, guys. So let's analyze AUDCHF, guys. Usually, I start on a weekly time frame, but on this one, I think I'm gonna start on a monthly time frame because it's kind of giving me some good vibes or something that we can make use of in a lower time frame. Okay, so what we're going to do right here, we're just going to check at the structure, guys. I'll always emphasize the structure, guys. You see, our structure looks like this. Our structure looks like this, guys. We have this beautiful downtrend. We have this beautiful downtrend, which looks like this, guys. Can everyone hope everyone can be able to see with you? Okay, this is in a shape of a downtrend kind of thing, kind of vibes. Okay, so let's look at this one, guys. If you have a structure which looks like this, impulsive correction, we are actually expecting the market maybe to be going to carry on towards the downside. So we can currently see that the market is in an impulsive phase, whereby if you can be able to see that the market is in an impulsive phase, the next thing that you need to be doing is to be looking forward for continuation patterns that will be going toward the downside, because this is a downtrend and then you are in an impulsive. So if you are in an impulsive of a downtrend, obviously you'll be looking forward for those continuation patterns towards the downside. That's how I trade, and then it makes my life way easier. Okay, but again, by looking at this structure, you can also kind of see something that looks like more like a double bottom kind of thing, because this one can say, okay, this is was if the candle, the body candle didn't really close below that point, I something that I can make use of, like kind of double bottom kind of thing. So we can still be like, okay, this market was in a it's kind of giving us more like a double bottom kind of thing, and then this one is gonna be what our neckline. So if that is going to be our neckline, therefore, which means the market is gonna we're gonna wait until we enter here, and then we're gonna be able to go out. That is just a basic movement of any structure. Impulsive correction. But now if you're gonna wait for us to enter at this point right here, so which means you're gonna wait for more than years, for years, waiting for this entry to go in so that we can go into that trade. So we're going to make use of what we have so that we can be able to see if we're gonna go with the directions towards the upside. But what I'm seeing right now at the moment, we need to respect each and every structure of each and every time frame or any structure. What I'm trying to say by that, guys, is that if you can have a look at this correction, impulsive correction, and then this impulsive. Remember, an impulsive, each and every impulsive move will have its own structure. For example, if let's say, let's just for example say this if we go to a lower time frame, this part of the market, let's say we go if we go to a 4 hour time frame, we would find something which looks like this. Let's say if we go to a lower time frame, we end up finding something which looks like this, and then maybe from your previous analysis you saw that there was a zone somewhere where the market once rejected, where the market once rejected, and then maybe previously it once retested it. So you can see that, okay, this is such a what, this is such a strong a zone that you can be able to rely on. And then your market, it's currently at this point, it's currently at that particular zone that you think it's going to be respected at this point right here. You need to be very, very careful when it comes to something that looks like this. You can see with, okay, this zone right here, it's very powerful zone. You see, it's a very powerful zone that I can do what, I can be able to take a buy from this point right here and go all the way to the upside. But now, do not try to take your trades or make decisions based on a higher time frame structure, and then you are ignoring the current structure that is going to touch the zone at that particular moment. Okay, like in this case, let's say you based on a certain time frame. You saw that okay, this thing is gonna turn here and go up, and then you ignore this structure that is going to touch there. Therefore, that is wrong because you need to respect this correction, impulsive correction, and then impulsive. Therefore, which means definitely the market is going to do what? The market is going to give you a certain correction at this point right here. It's going to give you a certain direction at this point right here before it goes to the downside. Before it goes to the downside, the market first has to fail to break below this point so that you can be able to say, no, okay, now this zone is going to actually play out and go all the way up. That is what I'm trying to show you this example so that you can be able to make sense out of what I'm going to say after, because whatever that I was doing here, I'm just preparing you for the explanation that I'm about to give you right now. So this is impulsive correction, and then impulsive. Yes, so there is a possibility that okay, this can be the double bottom now for the market to be going all the way up. But now we cannot decide that this is going to be a double bottom because the market was rejected before, and then it might be rejected again right at this point so that we can go up. Yes, it can happen, but now what is most important is that we need to respect this structure, the structure that is actually going to touch that zone which we are interested in is the structure that is the most important one, because it's the one that is going to tell us that the market is it in a form of reversing to be changing direction and going all the other side or not. Okay, like in this case right now, what I'm seeing is that this market is giving us some sort of like impulsive correction and then impulsive. Definitely after the market gives you an impulsive move, it's gonna give what is definitely gonna give you a correction. So we can't ignore that. Like in this case, the market still needs to give us a correction. Therefore, if it fails to break below this point, therefore that is when we're gonna say now the market is gonna be going all the way up. That is when we're gonna say now the market is going all the way up. So these are some of the things that people tend to ignore, and then these are the things that tend to cost them a lot. Okay, so we mustn't ignore such stuff. So like in this case now, as we are predicting, Guti, there is highly possibility that we can consider this as our double bottom. So which means when we go to a lower time frame now and then we find buying opportunities, those buying opportunities they must be until to this point right here. Therefore, which means our first take profit is gonna be until to that point right there, until to this point right here, because the market is still gonna go down to respect this structure right here and then go up if this is actually the double bottom to be respected. Okay, so let's go to a weekly time frame and see if whatever that I'm trying to say to you makes sense. Okay, so we said this was one of the impulsive move of the market. So what we're going to do right now, we're just going to concentrate on this structure. So this structure from here to there, it also forms a certain move, even though it's one impulsive, but it also forms a certain move, impulsive correction. And then this was the what? This was the last impulsive move. So this was the last impulsive move. So this was impulsive correction, impulsive. I know most people they will be like a bit confused. Why am I not counting these impulsive moves? Why am I not counting everything? Yes, I can count that, but that is part of this impulsive move, impulsive correction, impulsive correction, and then the market failed to break below this point right here. Therefore, that is when I said what now this is gonna be the correction because the market break above this high. Therefore, that is why this is a correction. Even in this case, land we have got lower low, lower high, I mean lower low, lower high, lower low, lower high. The market failed to break above this point, but still it has not yet broken above this point. So, which means currently somewhere here we can still say the market is still in an impulsive move because the market has not yet broken above this point or broken below this point right here. Yeah, well, hence you're gonna understand this thing the more you follow me or the more you check my lives. Okay. So in this case right now, we're gonna have something which looks like this because remember this was what we saw on a monthly time frame is the zone where the market we want to see the market coming to retest. Okay, so we still have this right here as well, right here. So this is the structure of a downtrend that the market has been retesting. And then currently now the market, it's in what? It's in this zone where the market once rejected this zone and went up, once rejected this zone and go and went all the way down. So we can literally say that this market at this zone, it is kinda in a ranging market. It is kinda in a ranging market. If you can have a look at this structure, we can still say this market, it is kinda in what? In a ranging market, but we mustn't forget that our aim is to see the market coming to this zone right here and then go down. And then if that double bottom is gonna be respected, therefore which means the market is gonna this is gonna act as one touch, this one is gonna act as our second touch, making it what? A double bottom before the market goes up. Okay, so now on a weekly time frame, let's just assume that it is a ranging market right there, and then we go to a daily time frame. So on a daily time frame, we see something which looks like this. Okay. So every time when the market touches this zone, it goes up, touches this zone, it goes up. And then it came, retested this zone, and then it went all the way down. And then it has been ranging within the channel, and then it touched here again, and then it went all the way up. So now again, it's exactly on that zone. So what we need to look at now is the structure which is going to that zone. If I can just readjust this for this rejection at the top right here. So by looking at this channel right here, and then we look at the structure or the manner at which this channel is going to be to that zone, it is wrong for us to say, okay, now the market, because it has touched this zone, we're going to take a sell all the way to that point right there by looking at just touches. Yes, you are right. You are practically right that when the market touches there, it goes all the way down. But are you respecting the structure at which the market is touching that zone with? Because you also need to respect that structure. What I'm trying to say about that is look at this: impulsive, correction, impulsive. Therefore, if the market is going to give you something like an impulsive, correction, impulsive, after every impulsive move you need a correction. It's literally like that. You need a correction before the market can even go down. We don't even know if it's going to come retest the second time, go down, or it's even going to break above, retest, and carry on going all the way up, because that is one of the possibilities that can happen. But we need to trade based on that particular structure that we are seeing. So in this case, we have seen this impulsive, correction, impulsive. So if we can make use of Fibonacci for this impulsive and see the golden zone of where the market might possibly turn, you would see over the golden zone. It's exactly on the what? On the previous high. It's exactly on the previous high. So this is the way the market has got like possibility to make a U-turn again, to go carry on all the way up. Okay, so we can just summary say, okay, the market might possibly retest the what? The previous high like this. So whatever that we are looking for at the moment, we are looking for what? We are looking for selling opportunities, because the market, yes, it is on the zone whereby most of the time when it touches that zone, it it rejects. So we are going to look forward for head and shoulder, double top, whatsoever pattern at that particular point right there, and then we can be able to do what? To enter the market to go all the way to this point right here before it goes up again, and then it's gonna go down if possible. It's gonna go down if possible again. You see. So now we're gonna go to a 4 hour time frame. So when you go to a 4 hour time frame, remember our impulsive move started from where? Our impulsive move is from this point right here. We need to be careful on that. We need to be careful on that. It's just I don't like it when I have so many information in the chart and then at that particular time I'm not using it. So this is where the market needs to come make a turn. But this impulsive, got higher high, higher lows, higher high, higher lows, and then the market gave us this impulsive move, and then it came give us this correction, And then after this correction, the market was supposed to give us the impulsive, which was going to break above this point, but the market did not break above that point right there. As you can see, it kinda, this second impulsive move, if you have got like a good eye, if you have got like a very good eye, you would actually see ukuthi this second impulsive, instead of it going, giving us continuation pattern and then carry on all the way up, it kind of gave us some sort of like a double top. It kind of gave us something like more like a double top, breaking of this neckline, and then the market has got highly possibility to break this point and then give us this touch that we are actually looking for, and before the market goes all the way up. So at the moment we are not looking at the chart in a way that the market must go all the way down toward the downside, because in that case we'll be guessing if you're gonna say the market is still not going to reject this point, because the structure itself says impulsive correction, impulsive correction, and then the new impulsive then can fail to break above, then that's when you can be considering to be going towards the downside. But at the moment now, we are in an uptrend structure, just that we want to make use of this correction phase. We just want to, because this is an impulsive phase. So if this is an impulsive phase, we just wanted to make trades in this correction phase. We just want to make trades in this correction phase before the market gives us another impulsive phase. So we can't be saying the sell from that point is going to go all the way towards the downside. So what I can say to you is that, guys, I think this market is going to be going down because of this neckline retest right here. So I'm saying I'm going to be taking a sell at this point right here. It's a very good straight simple forward setup. My stop loss is gonna be a bit high just to avoid a this thing stop loss hunting. So I'm just gonna be doing something like this. So this is my ODCHF setup that I'm gonna be definitely be taking on a Monday. On Tuesday, is it Tuesday? I don't know if the market is gonna be moving on Monday, but yeah, I'm going to take this trade, guys. It's going to be a very beautiful trade that it has got like highly possibility of playing out. Okay, so yeah, ODCHF, this is what it is. Alus FX, I am out. Thank you.